Hello, fellow traders. 'Tis I, the Rumpled One, trading with horizontal lines. Those of you who have been following me for days, weeks, months, years, maybe even a decade, know I like to use horizontal lines. I tried squigglies, everything from, 80x through, zigzag something or other. I've tried them all: MACD, stochastics, RSI, Bollinger Bands, moving averages. Most of these try and look for those magic numbers that give you the setting. And, then they talk about time frames. And to me, after going through all that mess, it's just a bunch of malarkey. It's real simple. All you need to trade is a horizontal line or two. That's really all you need to trade. And of course, I like some gauges to tell me what's going on. So we take a quick look here at the dashboard, which really, these are just, each one is a separate indicator, so you can mix or match. We've got the Australian dollar is in the upper rat zone. Right now, we really don't have any higher open, lower open trades. We've got a few wick zone trades possible. We got the pound dollar. We got the euro right around the daily open. So there's a buy zone trade. Anything here, okay, anything here less than, say, 5 or 10 pips is possible buy zone trades. And we haven't had any real recent highs or lows. Euro made a high or low 2 bars ago and a high 4 bars ago. Well, and see right now, looking at the Australian US dollar here, it's right around the 0-0 psychological trade. The red line is the ask line, in case you're wondering. You can see here M1, M5 was red. So it tried to get above, it's falling below. Now, one of the things I like to do is I like to look at the most recent daily high, daily low. So you can see here, this looks like the daily high, but if we put it over on this chart, it's easier to see the TRO HL5 indicator. And I also loaded up a couple of the higher high, lower low indicators. The elapsed time indicator here, and then just the gauge over there. Same information, just depends on if you want to use up the screen space here, if you'd rather have a comment here. Sometimes the comment, some other indicators have comments, so there's a fight for this space. One of the reasons why I like to use these gauges. So back to the main idea here, we're looking to trade. The highest high was the most recent, so that means price is heading this direction from the high. So we look for short opportunities. So right here, there was a short opportunity at the double low, and you see it pulled back. Now it looks like it wants to punch back up. Always be aware of the spread, because that's what can kill you. But let's take a look at the euro here. We'll put the euro up on the chart. And you can see we could take a short here at 110.10. On the candle color multimeter, everything is red. We're 3 pips below the daily open. Let's look at it over on this chart. You can see it's coming through the daily open. Now in this case, the low was the most recent, but we had a nice up bar here. There's a lot of movement, and so now it's heading back this way. So at the daily open, we just want to pretty much go with the flow. We can almost ignore the most recent high-low and just take this trade using this one simple horizontal line and trade with the cross. We can go all the way down to the 1 minute time frame. And something's slow here for some reason. There we go. And so you can see here trading at that open line with the direction of price. So most recent high, was a while ago. You can see it there. Most recent low. But once again, trading the daily open, we don't really have to worry about that. And once again, you can see here 110, 113. Doesn't matter what time frame. These horizontal line levels do not change. That's why I like them more than squigglies. Because if we had moving averages, every time we change the time frame, the squiggly would change. So one would tell you to trade long, one would tell you to trade short. Which way to trade, you have no idea. Same thing with stochastics, RSI, MACD, and the rest of them. You change time frames, you're going to get a different result. Horizontal lines stay the same. Open, high, low, midpoint. Really don't need too much more than that. Of course, if you just want to trade on a pure price, you can trade using the Sweet Spots Gold indicator. I modified it. I modified the market price. I created the spread alert and the multimeter. And I also, if you want to, you can always have shadowing of candles. Recently, I've been looking at the 4-hour candle, and I forgot to turn it back on. Do we want to turn it off? No, we don't. We want it so, and you can see here, we got the 4-hour candle. Because I used to use, or I have been using, a rule of thumb: don't trade against the H1 candle color. Well, what you really want to do is you want to trade with the H1 and H4, because you can see here there's some nice significant moves if you're trading with H4. So even here, if you were trading with H4, when it went from green to red, you would have made a nice one here, but then it was still red, so you don't trade. If it switched back to green, you can go long. When it switches back to red, you can go short. And you can see, using the H4 combined with the H1, just for a reference, you can definitely take a bigger bite of pips. So once again, you see here, it continued up. Because another trade I've been looking at, and let's just switch over to H4, is what I call the continuation trade. So you can pick it up anywhere. So you see this was a bear candle, down candle. So at the open of the next H4 candle, you have a short. So here, same thing, continuation. Now you have a white continuation. Okay, on this one, you continue. This one right here, maybe you got burned. On this one, you got stopped out. This one, continuation. This one, continuation. This one, continuation. On the continuation trade, you might only get 5 or 10 pips every 4 hours, but that's 5-10 pips you can bank on, and that's the whole idea. So, and even here with the H4, you can see it pretty much tells you the direction, and you take the trade when it cuts these lines, and you can see here there's lots of pips to bank that way. So you can use the horizontal lines, use them trading with the candle color. Remember, doesn't matter what time frame, we can drop down to the M1 there. And at the line, we're just going to go with price direction. In this case, you can see with the H4, the M1 candles, if you just stay with that, you can see, and rather than trying to trade against that H4 candle color, you trade with it. You can see there was pips to be made. Of course, the rule of thumb was never trade against the H1 candle color. And so you can see here, if you're trading with the H1, once again, there's pips to be made. So it doesn't matter. You can use either H4, H1 as a reference. You could just stick with M1 without any other reference. But whichever direction price is moving at the line, that's the way you want to trade. So, fellow traders, I hope that answered a few questions about trading with horizontal lines. It looks simple because it is simple. There's really nothing to understand. You can put a horizontal line anywhere on the chart, and if price comes up to it, you go long. If price falls down to it, is heading south, you sell short. It's that simple. So, fellow traders, as always, it's not what you trade, it's how you trade it. The Rumpled One, signing out.